All right, moving on. We have organizations similar to partnerships. We're still dealing with He-Man or Superman and Orko, but you have joint stock companies, and these are entities that issue shares of stock, but investors have unlimited liability. Joint ventures, this is business relationships similar to partnership except existing for a single transaction only. I actually thought about entering into one of these one time. My business partner and I were going to enter into a joint venture with a contractor and a bank to restore a historic home in Savannah. Unfortunately, we decided not to go forward with this because of the current market situation, but that was a joint venture. It was only to do that one thing. LLCs, limited liability company, attorneys really like these. They're partnerships type organization, but with limited liability. It's similar to a corporation, but you don't have the double taxation on dividends and whatnot. Limited liability partnerships, registered partnerships whose members run business but have limited liability. A corporation, we'll spend a couple of chapters on this, but a corporation is an association of people created by law into an entity. Now, for all intents and purposes, a corporation is a legal person, which is very interesting. It can't die. Importance. Pooling of capital. You have all these different shareholders. They bring all their money together, so you have a lot more capital to invest and in an effort to build the corporation. There's also limited liability. Capital contribution is your maximum loss. Meaning, if you buy shares of stock, all you'll ever lose is those shares of stock. Okay, so you won't lose any more money. Piercing the corporate veil is interesting, though. It's ignoring the corporate entity. Basically, you've created a corporate entity for the wrong purpose, and if you're not really running the corporation, you can pierce the corporate veil, meaning that the liability that shields you can actually be pierced and they can go after you individually. Disadvantages: people who own or control a majority of the voting stock have merely a dominant voice in the management, but not the sole voice. Another interesting thing is obviously the double taxation. No one really likes that. The corporation is taxed on its profits, and then those profits are given to the shareholders as dividends. That becomes income to the shareholders, which obviously is taxable. So, good and bad about corporations, but I think that there's good and bad about all these different business entities.